Hi, Paul. Welcome to Venture with Grace.
Hi, Grace. Great to be here.
To start the show, I would love for the audience to get to know you a little bit more. You started your career in investment banking and you have worked at Dropbox as a VP and partner at Index Ventures, as well as CFO of Pilot. Maybe we could start with like what were some core lessons that you've learned early on in your career, kind of shape you into who you are today?
Yeah, I think in my career, what I've always seen is that the effort of a few really committed folks can make a big difference in an organization. And I've seen that throughout Morgan Stanley, at Dropbox, places like Index. And that's what I see today with a lot of our founders.
Um, what about like I guess like maybe we could start with like the journey at Pilot. So like what is a day to day like as a CFO and what were some core decisions that you're making?
Sure. I've never had a traditional quote unquote finance or CFO role. So at Pilot, my role was pretty much a generalist, similar to my role at Dropbox, where I was a generalist. There I had a VP of Finance and Strategy title at Dropbox. I worked on everything from PR to product, and similarly at product at Pilot. I've launched half the products at Pilot. I led our communications and PR teams and helped build our RevOps solution architecture teams, in addition to core finance, which includes our accounting, FP&A, and strategic finance teams.
What does a Rev Ops team kind of look like? How do you kind of build something up?
Yeah, I think it kind of varies depending on your go-to-market motion. At Pilot, we had mostly inbound sales. We didn't have self-serve, and so a lot of the focus was on what can we do to increase the velocity of our AEs closing deals and find ways to make that process better, more efficient, and increase Pilot's overall ARR.
I wonder, so maybe we could start with how did that kind of like pivot into starting the fund? And then I know that you've been so after Index, you were scouting for CRV. Like, what kind of deals are you seeing that you feel like you kind of like build a thesis on?
Yeah, Pilot was pretty early in the AI application space, and we've taken a few core lessons from our time there. One is that outcome-based pricing does work. Pilot charged comparable prices to a CPA firm and has thousands of clients, and so we're kind of increasingly seeing that with AI today, which is a little different than how do you sell a software tool to people and how do you price that compared to other software tools. Two is that the market is growing very, very quickly, and that both on the infrastructure side, the dynamics are shifting very rapidly. The foundation models are, as you know, in a fierce competition to continuously improve. And same on the application layer, the folks that are utilizing different foundation models and other technology to deliver an experience to their customers are also iterating very quickly. So I would say the pace of innovation today is kind of similar to what we saw at the first early days of cloud at Dropbox. Dropbox was that year one customer of AWS. And what we saw with some of our mobile colleagues during that time at like Facebook and Uber, where there's a new platform, there's new technology that lets you do for the very first time a set of services that was never done before, and that's improving very rapidly. And so companies want to take advantage of that underlying infrastructure, underlying ability to serve their customers better.
I wonder if you could walk us through, like, at Dropbox, how do you kind of like build the corporate finance and strategy? So, like, at the beginning, what kind of problem were you guys solving? And I know that you helped them raise like 1 million in equity and debt financing, and later on, you have worked on like company strategy and business models. Maybe we could talk about like let's say using one example that like what you have solved from early on, kind of like shape the company's like trajectory.
Yeah. I think as I mentioned, like pretty much was a generalist at Dropbox. And so my objective every quarter was like, what are two or three projects I could work on that will move the needle in the company's outcome. One of the early projects that I decided to work on was helping really refine and define our target market of customers. Dropbox is a freemium product. 95% of customers are not paying users, and so as you can imagine, if you have no revenue and some costs, those are like gross margin negative, and then you have a small percentage of users that are highly profitable, and so the user acquisition strategy is, designed to hopefully get you more paying users. And one of the projects I led was trying to figure out what characteristics do those users have, which type of users have a higher propensity to pay. And this later made it into the S1 description, but it boiled down to looking at all of our users. At the time, we had over 300 million, and segmented them in a few different groups. One was folks using corporate accounts, corporate emails. As you can imagine, that monetized at a pretty high rate. Geography played a role, device type played a role. And so using signals that we could get at sign up and signals that we could target, as we refined our strategy from just having as many users as possible, since at the time we already had hundreds of millions of users, to figuring out how can we drive our business metrics. That was one of the early projects I oversaw.
You mentioned about like, back in time, the I guess like the thing that will move in the needle is like to identify like which I guess a group of audience that will like have the longevity to pay more. And as you mentioned, like there's like a lot of users that are doing things that are like not paying that much, but versus like, the enterprise client that they may pay a lot. I guess like what were maybe like three things that you have done in the company that you kind of like help them to adjust the trajectory of like where they're going with client acquisition?
Yeah, I think one is like figuring out what sort of partnerships you want, and a lot of that was informed by some of the earlier work I mentioned. And we shifted a lot of our partnership focus, for example, from international mobile to more US desktop partnerships with companies like Dell, because that group was a lot more monetizable at the time to Dropbox. Two was taking a look at what capabilities folks are specifically willing to pay for, and a lot of that informed the Dropbox Advanced product launch I was involved with, in pricing and packaging. And then number three was figuring out where we have unique capabilities that we bring to bear and helping make sure that is clear on the market, both to our equity research analysts as we were getting ready to go public, to our investor base, and also coordinating with our communication and PR teams so that we have like consistent messaging on that.
I wonder, so like typically how do you since you mentioned about like you guys are have like event product launch strategy, pricing and packaging, how do you price a product?
Yeah, I mean, I think classically where you want to price a product is somewhere between what it costs you to deliver the product and the value that a user gets. Um, and I say somewhere between because you want to leave some consumer surplus where they're getting more value than they're paying for, because that often translates into customer referrals, a flywheel, higher NPS. And so you do want to leave some money on the table versus like, here's the exact dollar amount, where like if it was $1 more, I would never buy this service, but since it's $1 less, I am. You want to leave a little bit of margin there. And then I think the big questions are around like how much value does it actually derive for a customer? And that's both a relative basis, like what are their other options, what would they otherwise do, and what does that cost compared to what you want to charge? And two is also the absolute amount of value generating. And I think this is important for a lot of AI startups today, because a lot of the value that they're generating can sometimes be extremely high, but then it becomes a question of relative value where there's maybe two other alternatives that they would use, and those alternatives are priced at a price point that are less than the value they generated. So I think that's kind of like the bigger constraint often is the competition in the market, and taking a look at what makes you relatively a good value for the customer compared to the other options that they would otherwise purchase.
Love that. I want to shout out to our audience. Hi, Sidki. Hi, Nixumo. I don't know, like the person's like internet name. I wanna I wanna tap into like I guess um like when you leverage like these like experiences in the current like investing um situation, like how do you think about like maybe we could start with like depth ventures, like so when did you decided to like start the firm, and what were some like thinking framework kind of like how you guys like kind of gonna stand out among a bunch of like different firms that invest in pre-C and C?
Yeah, we decided to officially start the firm this year. The reason we decided to start the firm was we felt there was a room for a very early inception focused pre-seed seed fund that is AI native with two founders, two co-GPs that have been in the trenches building these kind of outcome-based AI application startups. Pilot, of course, was an Index and Sequoia-backed AI unicorn and one of the first. So we felt that we had relevant experience to bear and the right networks to meet the right founders that are building in these spaces, along with a long track record of angel investing and institutional investing in some very successful companies.
Maybe we could talk about like do you want to talk about any company that you have worked on through the fund, or like do you want to talk about the co-founder background as well, or
Yeah,
you wanna, yeah.
well, I'll start with my co-founder's background, and I can talk about a few announced deals that we've done and a pending deal that is not yet announced. Um, First of all, my co-founder, Jeff Arnold. Jeff and I met about 12 years ago at Dropbox. Um, Jeff is MIT computer science by training, three-time founder. He started his first startup based on his MIT master's thesis on how to update servers without requiring to reboot them, which is obviously important for uptime and reliability for enterprise applications. Um, Jeff grew that to millions of revenue, exited that startup to Oracle, then started a second startup, which we acquired at Dropbox, which is how Jeff and I met. Jeff was leading parts of the product org, and we were collaborating on the product roadmap together. And so we actively worked together at Dropbox, not just over labs. And then I had joined Index Ventures after Dropbox. Jeff had gone on to join OpenAI as their sixth full-time employee at the time, super early in 2016. By the time he left, I think there were like 40 plus employees, so it grew pretty rapidly. And Jeff was there for a short while before starting Pilot. And while at Index, we led the Series A and subsequently the Series B in Pilot. And so we kind of reconnected there. And Jeff asked if I would consider joining full time to Pilot, which I did, and help scale out Pilot. So that's kind of a little bit of our like co-founder journey. In terms of some of the companies we backed DealOps, which is started by Spiri, and it's in the AI pricing space. They work with companies like Harvey to help price their enterprise deals. And as you can imagine, there's a lot of data and other attributes that go into like how do you price an enterprise deal. And today, a lot of that historically has been done via a bunch of folks sitting on a deal desk, clicking around in Salesforce CPQ, and so that's was kind of ripe for disruption. And deal ops is growing very rapidly in that space. Another investment we've made was in Town, started by the CTO of Plaid and a director of applied AI at Google, Tony. The two co-founders we've actually known for over a decade. And so we are really excited to back them on their next journey together. We've signed a deal that we're closing in about 2 weeks. The company is focused on optimizing self-serve and digital funnels, customer funnels for Fortune 500 companies, and work with a number of Fortune 500 companies to detect and triage funnel leaks. And funnel leaks can happen because of an update gone wrong, or a particular promotion, maybe a change to the user flow or a change to SKU. And so there's lots of reasons why you may see like a reduction in conversion or reduction in traffic in any part of the funnel. And obviously it's very, very expensive if you're a high volume enterprise company for any degradation of performance there. And typically what happens today is that it creates an alert. Some team of folks in engineering and BizOps take a look at the alert, try to figure out, okay, like what's changed week over week or year over year to cause this change in the funnel, and then try to solve it. And it's like requires a lot of coordination, requires a lot of human hours. And so using AI agents to do this, we thought is a really interesting application. And of course, we've seen a lot of these funnels firsthand from our time at Dropbox and Pilot, and my time investing in Index. So yeah, that's our latest upcoming investment that we're making.
Compared to, I would say like I want to tap into like the investing strategy or the things that you guys are seeing. So like since you mentioned like the first company was like kind of doing pricing related things, and since both you and your co-founder are coming out of Pilot, so like you guys have a lot of experience in these like accounting related things or like finance related like expertise, and maybe we would talk about like from the fund level, like so you have work at Index and CRV and now at your own VC firms, like maybe we could talk about like how do you think about um the like the fund strategy, whether it's like portfolio construction or how like the valuation cap to like which like how do you like do you do reserve, or like how do you kind of like thinking about running your own fund compared to like the past like two experiences working at different firms?
Yeah, I think at firms like Index Ventures, CRV, and other funds I've been at, I think what's ultimately the driving factor of whether the fund does really well is making investments and partnering with the very best founders in the industry. And I think a lot of the other items are a little bit secondary to that. I think our portfolio construction is pretty standard. We're looking at 20, 25 companies. A lot of the considerations here are if you have too many companies per vintage, then you don't have enough time to partner with the founders. And so we're a little bit capped by like people time. But apart from that, our primary focus is on partnering with the very best founders, the very best companies that are building large iconic businesses.
From the, I guess like maybe we could also talk about the company that you have backed at Index. You have worked on Datadog, built Confluent and Slack. Maybe we could talk about like from when you first like encountered the company, how do you source the company to like evaluating to like winning the deal to thinking about exit?
Yeah, I mean, I think it kind of depends on the stage. Like Built was an early stage deal. We did their very first round of financing. Um, Mark Goldberg and I saw that they won an award in Nashville for technology, and thought that was interesting. So we got in touch with the founder. This was actually pretty interesting. Um, I think like there's no like one size fits all. I think there's a good approach to that. So in this particular example, the founder mentioned they had a local kind of like uh, billionaire on the board of the company already, and they were willing to finance the company. And they haven't spent much time in California or Silicon Valley with VCs, and it wasn't clear for them like what that process would look like or what a pitch deck needed to be. And so their part of winning the deal was that I actually created their pitch deck for them from scratch. So I created all their slides for them. I, of course, like interviewed them, some information. They shared information with me. So it was a collaborative process, but I created their slides so that they would be able to walk into our partner meeting, confidently present them, and they walked out with a term sheet. And so I think, yeah, being flexible and figuring out how you can be helpful to the founder and bridge a gap between what you may know as a VC and what they would like to accomplish. And whether it's slides, talent networks, customer introductions, best practices, or what we're seeing in other portfolio companies, that's generally a good way to add value to companies. And I think a lot of it comes to being very founder driven. I think my goal is never to impose any help. I think it's like if they would like help and if I have some relevant expertise, I'm happy to help. But certainly believe founders are running companies, not VCs.
When you can you elaborate a little bit more about like the belt situation you mentioned? They won an award in Nashville. Like, what did they win? And then, like, why were you guys in Nashville in general? No, like, I mean, like, obviously Nashville is like a great place, but like, we're both based in SF. So, like, how did this connection kind of happen?
Yeah, they won like a local technology award there. And actually, it's interesting. Pilot had an office in Nashville as well,
Oh,
where we had a number of employees. One of our co-founders was from the area, which kind of influenced that. But also, it was a good area for us to have a secondary office for some of our operational tasks. I would say that like Bill definitely benefited from COVID and folks working remotely at the time. And that allowed them to kind of supercharge some of the like executive talent they were to bring on during that period of folks that normally maybe at the time wouldn't have joined a national company. I think today, like there are talented folks in many different geos, and so it's very possible to build large companies, whether you're like a ramp building in New York or Datadog in New York or folks in Austin, Nashville, through increasingly, obviously, the AI labs are based in San Francisco. And so a lot of what we're seeing today for AI application startups are also in San Francisco because of the connectivity between the labs and the AI application companies that are built on top of that infrastructure. The labs do a lot of kind of community building along that. They have founder days, they have dinners, they have events. Because it's kind of a mutually beneficial ecosystem where these startups are their customers, and some of the startups grow very, very quickly. And the kind of infrastructure provider to a lot of these startups are the labs.
I wonder, so like since you mentioned about like Nashville has like a really great ecosystem and like I guess like the other part is like when you are thinking about building your thesis for your fund, like are you guys like geo based in like I mean obviously I saw you in SF all the time, but when you're thinking about like investing, do you invest in like across the US or um how do you think about like the strategy and from like a sourcing perspective, do you have like an internal like do you have like a funnel that you guys are kind of like intentionally sourcing from and yeah, also by the way shout out to Jackie, Steve, Subal. Yeah, just wanted to say hi.
Hi, folks. I would say that our sourcing strategy is primarily in our network. Jeff and I have both been in Silicon Valley for over a decade and have been backing founders for over a decade. And so we feel very grateful that we often get founder referrals from our network. Um, all three investments I mentioned were within our network. And so that's primarily how we source investments. And just given we're like a relatively lean team for our new fund, I think our focus is fairly local, just given our ability to um, spend time with founders here locally and be able to um, make sure we're getting enough time to be able to do that. It's a little easier with a small team if it's local.
When you are thinking about like I guess like what does a CRM look like for yourself when you're kind of evaluating the companies?
I think our CRM is primarily focused at our pre-inception. So I think once folks decide to start a company, that's a pretty high velocity deal cycle. It doesn't take people, months or years to raise once they've made a decision. And it's particularly kind of the type of folks in our network. And so that part of the cycle is like pretty short. It's not like a growth fund where you're like, okay, there's these 200 Series A companies, and we'll see like in 6 to 12 months whether we should engage them for a Series B conversation. It's a little different than that. It's a much higher velocity cycle on that. But so most of the folks that we're tracking or kind of are at top of funnel for us are folks that haven't started a company yet. They're still at their prior company or maybe their prior startup, and so that's kind of how we think about the funnel is kind of pre-inception primarily.
I wonder, maybe we could talk about like I don't know how much you want to share about the fundraising, but maybe we could start with a high level, building LP relationships. So I guess like when you are thinking about like fundraising, so like are they from primarily high net worth individual, or like are you trying to raise from institutional, or like maybe we could talk about like the general um strategies on like approaching the right LPs for a fund.
Yeah, I think it really depends on the fund, the strategy, and the particular GPs or founders of the fund involved. I think our strategy was to, at least initially, focus primarily on institutionals. All our LPs currently are institutionals, mostly fund of funds. And I think for us, like that kind of makes sense given our particular relationships and where we felt we want to take the fund for fund 2 and 3 and going into the future. It is fairly common, as you know, for a lot of folks to start with kind of high net worth individuals in their network, because those folks are often more willing to take a risk and bet on you. And then it just, I think, depends on the institutional front. But I think for us, we want to start with the institutionals because there's a greater ability for them to re-up to your funds 2 and 3. There's somewhat better signaling, and just given like what we see ourselves building in the long term, we suspect we'll have an institutional base.
I wonder, so like for the current startups, what are things that they would kind of like, I guess maybe we could start with like, what are some trends that you're seeing in the company that you have been backing? And like, since like I feel like this year is like the year of like AI agents, like how do you think about like next year? Is there any particular buzzword that you are like very excited about? And yeah.
Yeah, I think what's exciting on the AI agent front is if you look at all the data, and we're seeing this at our portfolio companies, but also in the white papers, the median time between supervision required for a particular AI agent is reducing by like 50% every 6 months. It's currently like 30 minutes at 90% accuracy, 2 hours at 50% accuracy. I think when you could get that to a full workday, a half a workday at 90% accuracy, that's pretty comparable to having FTEs, and I think that's going to be a big unlock. Right now, the agents are tackling some of the highest value use cases where, yeah, even if an agent does 30 minutes to an hour of software engineering, that's pretty valuable and certainly worth paying some amount of money per month to unlock. And I think that will only increase just given the progress that's happening there. I think we're probably like 12 months away from that being the case for a lot of different areas. And so I think that's pretty exciting because if you look at the trajectory, if we go from half an hour to an hour to 2 hours to 4 hours, that pretty much gets you there. And if you get there over 2 or 3 years, like that's a pretty significant change in how you use tools. I mean, if I think about the amount of time I spend between clicking on things at a computer, it's like usually seconds, not hours. And so that's a pretty fundamental different way of using computers for a typical knowledge worker. And so I think it's a lot of exciting things are ahead there. And we would rather be 6 to 12 months early than 6 to 12 months late, especially because momentum is so important right now and getting both mindshare, brand, and funding for startups in like a highly competitive environment for a number of these markets.
I guess like from I guess like one part I'm curious about like it's like you mentioned about like it's about like the speed as well as like how fast companies or like technology are processing the data. And I wonder maybe we could talk about like any use case in the future that you are very bullish about, like maybe call like three trends that be beyond the speed itself. Like is there something that you're really excited to look into in terms of like investing sectors next year?
I think the biggest theme for us is really the fact that for a long time there's this notion that software is in the world, and I think that has been true to many extents. That software spending has increased pretty rapidly. I think what we're really excited about is that for one of the very first times, software is ending up to be a significant global productivity drivers in a very measurable way. You could jump into a Waymo and you could see that, like, okay, instead of me having to drive for half an hour on my commute, I could do other things, focus elsewhere, have a conversation with someone. So I think there's a lot of things that are unlocked by the amount of productivity that we're hoping gets generated over time. And I think that's a pretty fundamental reshifting of the landscape. I think it's pretty similar to other big platform shifts, whether it's internet, mobile, where there was a pretty fundamental change in how you interact with the technology in your life. And in many ways, it's much more productive and efficient than it has been in the past.
Can you maybe like since you mentioned Waymo, like are you thinking like what kind of different use cases that like you feel like are like will unlock like the most amount of like productivity? Is like are you talking about like maybe robotics or like what are some like specific sector that you feel like will help with I guess like whether it's agent or like the technology itself?
Yeah, I don't think there's many sectors where I don't feel like they will be reshaped over the next decade. I think the biggest things are how repeatable is a process. Those things have been better candidates for software historically in the past, and I don't think that's going to be very different with AI, where if there's this particular workflow with a particular rule set and there's some amount of variance, but it's pretty constrained, I think that's something that computers are very good at, and particularly AI is very good at handling. I think the areas where it's probably going to be least impactful is if there are very, very high degrees of freedom and a lot of it is subjective taste versus a benchmark. So I do think, things like art or things like entertainment still are driven by a lot of creativity and doing things that are not in like a database or done in the past. And those things sometimes could be extrapolated, sometimes they can't be. And so I think those are areas where I think will probably be the least impacted, and at least in the short term.
I wonder, I guess like from, I guess in the when you were like raising funding in-house, like from pilot, to like raising funding as a fund, like what would you say is like something that's very similar versus like what are something that's like very different?
I think what's very similar is that the folks that are partnering with you care a lot about yourself, the team, the story, and like who are they backing. And I think that's true for VCs partnering with founders, and I think that's true for LPs partnering with fund managers. I think what's different is obviously the nature of the fundraising cycle. For a startup, generally there's like successive rounds that they raise at increasing valuations, and there's a lot of FOMO that goes into like if you could get into a round today, that's going to be 3 times more expensive next year. Like you'd much rather get into it today for a lot of folks. For funds, it's a little bit different. Like often, like the terms between funds are not like 3x different. Even if you like don't like be an LP in fund one and you're like LP in fund two. I think what they are thinking about is like one is like allocation and access. Often like early supporters, early LPs and funds are recognized and allocated even many decades later. Before Dropbox, I was at a large fund called Leonard Green and Partners. Today has about $80 billion in AUM. And some of the first LPs still did get extra recognition, access to allocation, and so I do think that a lot of LPs do view this as a multi-decade relationship, and those things can matter, particularly as funds are successful and allocation is difficult to access.
I guess like one thing that I'm curious about, like when you are um thinking about like fundraising for your fund, like how do you create a deadline? Since I feel like it's very hard to incentivize like an LP to be like, hey, we're gonna close in like 3 months, and then how do you really set up the deadline in general to like for when it comes to fundraise?
I think typically what you want to do, whether you're founder raising from a VC or you're a GP raising from an LP, is that you want to get critical mass of folks that are interested in investing. And then once you feel like there's sufficient interest, then you can figure out whether you want to let one of the investors preempt you or you want to set a deadline and then like compare term sheets. So I think from the founder side, it's when you feel there's sufficient investor interest in your company. And I think on the GP side, it's similar. It's a little bit less term sheets and a little bit more like when are you having sufficient amount of commitments where it's interesting to folks to because they believe that they want to get their allocation while there's still allocation available. And but the dynamic is kind of similar. I think you want to make sure sufficient interest if you want to figure out how you set a timeline.
I guess like I guess like when you are trying to like gauge LP's interest, like I guess like do you how frequently do you have to engage with the fundraise? And obviously I know that it may be sensitive, but like maybe we could talk about like, as a founder, what would be your suggestion for people to when it comes to like fundraising from you guys or like with everybody else, like how do you think about like what is a successful fundraising journey should look like? Is that how do you create an initial like FOMO for the investors, and what kind of momentum that you have to achieve right now at the current state of like AI to actually raise the first round?
Yeah, there may be other folks that have more like immediate hacks, but I would say what's worth investing in throughout your time, even before you're a founder, is your trusted networks. We take referrals from founders that we trust that say another founder is great very seriously, both because really great founders know what a really great founder looks like. They know what that bar is. And particularly if they're an angel investor or co-investing into the round, there's a lot of good alignment there. And so I think for us and a lot of VC firms, that's kind of a very good way of getting introduced is through another founder that the VC respects or has invested in. And so I would say like you kind of want to start that process kind of early as possible in terms of like if you're building relationships with other engineers or other folks that you're working with and you have a reputation for doing really great work, that tends to kind of carry throughout your founder journey.
Since like you have right like 8 investments six-figure checks at CRV. Maybe we could talk about like what are the things that like you have invested in, if not particular company. Maybe we could talk about like the things that you've kind of like how does the decision making process look like? Is that like every quarter you invest in a company, or how does it kind of like how do you I guess like yeah, maybe talk about like the investing journey there while you were working at Pilot. Like, was it easier for you guys to spot deals as you are working at a different company, or do you feel like it doesn't really matter, like it just like come through your network? And do you like have to write your own memo? Like, what would be including in the memo?
Yeah, I mean, I don't want to speak on their behalf. I think every kind of scout relationship is a little bit unique, depending on the scout, the GP, and various factors. I think for myself, since I've come from like an institutional investing background at both Leonard Green and Index Ventures, I'm pretty used to writing short memos, and it's pretty easy for me to take my notes as we meet the founder, and kind of summarize my thoughts in that format. And so I would often write a short memo. In the CRV case, so the reason I partnered with CRV was that my friend Caitlin, who was previously at a different VC fund, joined CRV as a general partner there and asked if I would kind of collaborate with her. And she thought this would be a good way to collaborate together. And so, yeah, it was because we had this pre existing relationship, and that's kind of how we decided to kind of partner together on that. Prior to that, I was mostly writing angel checks out of personal capital. Because I think there is like a balance where some of the scout programs have a pretty high level of overhead, or there's like a lot of process involved. And for me, I think it was important that like I could continue to get access to the best founders and be able to move quickly. And so that's kind of how I thought about like whether it makes sense to partner with a fund or not on some of those angel investments.
Do you have a checklist for your decision making process? Like as you mentioned, like you would take accounting to very seriously with the founders that were kind of like referred by other founders in your network or other founders that you have backed. Like if a founder that came to Silicon Valley or like not in Silicon Valley, like without much of a Silicon Valley connection, like what would be your suggestion for them to kind of like go after to the about the fundraising journey?
Yeah, I think it really depends on what they're building, who they're building it with, and which VC funds they're targeting. I think for funds like us, I think it's helpful if you establish a good reputation with other folks that we know well in the Valley. And that tends to be something that some funds look for. Other funds maybe primarily rely on the deck or the meeting to decide. So it really depends on which funds that they're looking to target. But certainly for folks new to any particular community, I do think it helps to kind of invest in a community and invest in folks getting to know you and build that relationship. Because I think if folks are able to say like they both know you and know you're very talented, in most communities that tends to be to your benefit.
When I guess like when you're picking things that are like that comes to you, like what are something that you would never take a look at? Like so for example, for a lot of people that would be robotics or anything that will consume a ton of capital or like foundational model. When you're evaluating the deals, like what are something that you would completely just like skip? And um when it comes to like the second round of fundraising, like what are some evaluation benchmark that you would use? So for example, for a lot of people would be they chat with like future round investors to see if they would be interested in like taking a look for the future rounds, or like what, or like maybe like taking them to meet their potential customers and then see if the customer are interested in buying that product. What does your journey kind of look like to evaluate a company?
Yeah, I mean, we're meeting a lot of these founders very early in their space. Often there isn't even a product to have a potential customer opine on. I think um, for us, it really comes down to two things. One is, do we believe that this is a very large market that could support a multi-billion-dollar company in it? And typically we look for like, can this company on its own get to like $1 billion plus in AR? And I think the market being very large obviously makes that more possible to happen. And ideally, it happens in a way where you don't need to get like 98% market share for you to be able to do that. It's a market where it's large enough that if you get a reasonable market share, you're able to kind of generate this sort of outcome. And two is really comes down to, do we think the founder has the technical capabilities of building excellent software, excellent company, and has all the ingredients? Because I think if you're building a AI software company, it's helpful if you're really great at building AI software.
Um, I wonder, so like when it comes to like, since you have also work on like as an operator yourself, like you have work at Pilot and Dropbox, like when it comes to like building an effective team, what are some lessons that you've learned from like a team building perspective on like what to hire, what not to hire, especially during today's climate? I feel like a lot of startups are like really focusing on like having a really, really small team to maximize their impact. I guess like when you were looking at these startups, like from the two founders with living at garage or something, what are some like characteristics that you feel like were very important for you to evaluate the founder and evaluate the team?
Yeah, I mean, I think there's a couple characteristics that we found helpful. One is um, a lot of raw drive, relentlessness in pursuing something that they want to build. Founder journeys are both long and there are ups and downs. And so I think having that motivation, that drive, that ambition is very helpful for our founder. Two is, I think I mentioned like the right technical capabilities with at least one of the co-founders to kind of build the underlying product. And then I think number three is where we believe that they could scale to being an executive leader, CEO of the company over time. Because initially it's about getting your first customers and driving your first few $1 million of ARR. But then over time it shifts increasingly to can you hire, retain, and motivate the right team as your company scales in size. And it becomes more of like a people leadership, product leadership than IC work. In terms of talent, um, throughout my career, I'd mostly focus on recruiting generalists that are very, very high slope. Number of them are senior leaders today at places like OpenAI or at top funds in the industry. And I think that makes sense for roles where there's a lot of upside. It's a little similar to venture investing, where there's a lot of upside, high variance, and like the outcomes can be very different depending on who you hire. And then I think it makes sense to spend a lot of effort into hiring folks that could drive the like outlier outcomes. Um, and so that's been kind of my experience. I don't think that's the right fit for every role, and I don't think that you necessarily want to evenly prioritize every single role at the company in terms of where do you spend your time recruiting as a founder. But certainly, I think every early role and every role where like they have a lot of degrees of freedom and could generate very, very different outcomes. I think are roles where like founders should spend a lot of time on for recruiting instead of very high bar.
Um, since you have like, I guess like one other question is like, since like, I know that you guys have great access to OpenAI to like all these other like um top companies through the investing journey. How do you fight into the hot deals? I feel like every popular company, there's always like investor chasing them. Like, what's your thinking for more kind of like winning the deal in general?
Yeah, I mean, I think our general strategy is most of the hot deals you reference end up.
Oh my god, I think we have a fall off. Hi, King Property Dinner Dealer. I just wanted to say hi to everybody who comments. Uh, okay, you're back.
Okay, yeah. Um, I, I think, yeah. So when you reference like hot deals, I think often they end up being a little bit later stage because at that point they have a brand, they have customers, they have a lot of traction. I think there are some exceptions. I think if you're,
Even the two guy in a garage vibe people are like really popular these days. Like especially like, YC or like all these like very obvious places like to or like certain like researcher that left XYZ top like frontier labs and like starting a new company, yada yada yada. I feel like that could be like very competitive as well.
yeah, for sure. I think every deal could be competitive. I think you basically want to be there before other people also think that it's a great deal, and that means taking some more risk and like being earlier in the journey. Maybe it's before like people even like start their garage operation, or before the researcher leaves the company, or maybe before they're a senior researcher. And so I think partner with folks very early in the journey is helpful.
Um, I know that we're about to hit the time. Maybe we'll wrap with a quick 1 minute fire round.
Sure.
What's your favorite book?
Oh, I like Outliers by Malcolm Gladwell.
Who would you invite to your dinner party?
Just so many people I would invite. I I think the classic answer here is probably I would choose someone that I feel like I learn a lot from.
Who made the biggest impact in your career?
I think the biggest impacts on my career are probably some of the folks I worked with at Dropbox. So shout out to the team there.
Where can we find you outside of work?
Sorry, could you repeat that question?
Where can we find you outside of work?
Where can we find me outside of work? I like kind of being outdoors. So you might see me at a hike. You might see me all along the coastline. So yeah, those are some good places. And then some of your events.
Oh, yeah, of course. Well, thank you so much, Paul, for coming on the show today. It was such a master class for managing finance related operational stuff and AI and investing.
Thanks so much for having me, Grace. Hope you have a great week.
Thank you. Let me quickly answer.